Hello, guys. Today we will talk about our portfolio and how to trade the Inflation Reduction Act for 2023. So we're looking at our portfolio. We have 118,000. All time we've lost so far 31,000 from a starting point of $149,000. At our peak, we were up at the 11,000 um, in 2022, but ultimately we played a lot of options with Tesla, and Tesla destroyed our portfolio, causing us to lose, mainly due to the fact that Elon was selling shares and had a lot of margin posted for his Tesla stocks to buy Twitter. But how are we going to play 2023 to make this $30,000 to $40,000 loss back? Well, we'll take a look here. So right now we're playing Amazon. We're doing Meta, Tesla, McDonald's, uh, Piedmont Lithium, Ulta. We have a little bit of gold and Toyota. So the Inflation Reduction Act brings us to basically Toyota, Piedmont Lithium, Tesla as the main drivers. We believe that Tesla will, given that they've lowered their pricing for Model 3s and Model Ys, they'll have a lot more demand, lowering their price, although their profit margins will also be reduced. We see that they are actually still profitable even lowering their prices, whereas their competitors, which include Ford, General Motors, Rivian, are all burning cash and losing money on each vehicle that they produce. So given that they've reduced prices, Tesla reduced prices and is still making a profit, they might actually drive out competition. So that's our thesis for Tesla. As far as Toyota goes, they have not invested heavily into EVs and hybrids, although their 2022 lineup for cars in the hybrid space, including their new Prius LE and their Prius 2023 model, looks very good design-wise. Most of their cars are hybrid and still utilize a combustion engine. But the thing with the Inflation Reduction Act is that the Inflation Reduction Act enables basically the credit to be applied to hybrids, so they should also benefit without losing too much profit margin, given that they have combustion vehicles to offset their any losses they incur from the transition to battery electric vehicles. As far as lithium, so within the IRA or the Inflation Reduction Act, and it starts off with a 40% production of vehicles in the U.S. in order for your car to qualify for the credit. But also with your batteries, you need to have it be mined within the countries that have trade agreements with the U.S. So Piedmont, they have a North Carolina mining facility that they're going to have operating soon, and they have done very well so far, given that a lot of firms are investing in Piedmont to make sure that they get their lithium supplies from the U.S. So that's the play for Piedmont. As far as Ulta goes, given that a lot of analysts and the economy indicates a recession in 2023, a lot of layoffs happening in big tech and larger big cap firms. We're going a little bit more diversified in our portfolio. We're investing in staples, consumer discretionary and consumer staples. So Ulta makeup. Makeup will always be something that people purchase, especially the female demographic. So that's where we're investing in Ulta, especially with pandemic lockdowns rising and being relieved from North America. So there's a surge in demand for cosmetic goods. Right now they're trading at all-time highs, which makes me a little bit nervous because we're not really buying it with a margin of safety, but we do believe it's a high quality business, And as everyone says, it's always better to buy a high quality business at a fair price than it is to buy a bad business at a very like a very discounted price. Gold, there's nothing much to say here. We just have a little bit of gold. Um, McDonald's, we're trying to diversify into dividend paying firms. So McDonald's has a pretty decent dividend at 2.1%. Ultimately, it's also trading at all time highs. Um, yeah, it's just a diversification play. For Amazon, we believe that the human behavior and consumer behavior of Amazon Prime is very strong. Many people can't live without 2-day shipping now. Once we see the benefits of basically Amazon Prime and the fact that ultimately this is a long-standing quality business due to the fact that their Amazon Web Services is also doing very well. We like the company in general, and they have layoffs, so they're making better use of their resources by cutting down on labor costs. Now, the biggest thing that we're bullish on is Meta, given that it has only a price to earnings ratio of 13. We believe that it has been beaten down over the course of the past year and a half, with the fact that Metaverse play by Mark Zuckerberg, analysts in Wall Street did not like that that investment into the Metaverse. But we noticed that Mark Zuckerberg has changed his stance and ultimately has prioritized the overall main business of advertising, and they've ramped up that portion of Instagram ads, Meta platforms advertisements on Facebook has gone a lot higher. They're focusing their resources there to generate cash flow. So we really like the firm, given that their earnings are very well priced at $13 for their earnings, for their $1 of earnings, and then ultimately we see that their future, the fact that they're positive cash flow and they have earnings is really good when you compare it amongst the other big tech players. The fact that they have like a ability for upside returns if Metaverse and the Oculus VR headset does well is also something that we're not paying a lot for. So most of this $13 that we're paying for a share goes towards the Instagram ad revenue, goes towards the Facebook ad revenue, and all of this loss in the past year, this 55% loss, was shed from basically the Oculus and the Metaverse. So we're getting the Oculus and Metaverse kind of for free, and if it does well, then we'll have a higher upside than just the advertising cash flow. That's why I like Meta, and I like how Mark Zuckerberg has shown that he's more reasonable than not. So that's all for the 2023 play that we're doing. We're going to have a lot more cash sitting around earning 4% interest on Robinhood. And I think we'll slowly trickle in with recurring buys of Meta, as well as McDonald's and Toyota. I paused my Tesla recurring buy given the fact that I think Toyota might be a better play in terms of the automaker market. But in the long term, when Tesla ramps up their Megapack and their hopefully they have a robo-taxi that can do full self-driving, then we'll start looking at Tesla again. But we already have enough exposure of $9,000 worth of Tesla. All right, that's all for me. Thanks. Bye.